Okay, everybody, thank you, or Jack and Mark, thank you for helping with the sound check earlier. I appreciate that. A few more people have joined us. I'm glad to see that. I was a little concerned. And that was going to be my first set of questions for you. But once again, Vince, Tao, Sonny, Ono, Nancy, Mark, James, Jack, Henry, great to see you. Let's start off as we always do. Let me know if there's any comments, any questions, or any actual trades that you'd like me to touch upon. Feel free to take time, compose them, put them into the room. Um, so that's number one. That, I guess you could call that officially my first very consistent question to you, because that's the question I ask at the open of almost every time I'm on a microphone in an IFT room. Secondly, thank you for seeing the notices earlier or the emails earlier, however you found out that I had to switch from 1 p.m. Eastern to 4 p.m. Eastern. I do have a thought about mixing up the day and time every once in a while, but that was not my intent today. Something did come up, and I'm not sure when the notices went out or when it went up in the control center, but I hope I actually hope it was before today, because I think I mentioned it to IFT on Sunday. Doesn't matter. Obviously, people got the message. Sunny, thank you for the greeting. Next, I really do not want to keep you that long after market hours, so this may be brief unless there's a lot on your mind. I definitely have time to take questions and trades. Don't forget, if you do post a trade in the room to the best of your ability, always try to include the following 6 items. And I repeat this all the time on purpose for reinforcement, psychological reinforcement, educational reinforcement, because if you really think about it, you do need all 6 items in order to fully form a trade. I always use the example of a sentence in the English language. In a sentence in the English language, you minimally need 3 things. You need a subject, a verb, and an object. Well, in trading, you need 6 things in order to fully describe the full thought of the trade. You need, number one, what are you trading? In Forex, what's the pair? In equities, what's the stock or ETF? Number two, you need to express the bias. Is it long or short? Number three, and often at IFT, number three will actually cover 2 items. It'll cover the bias and the strategy, right? If you say a VBS, I know the bias is bullish and the strategy is a VBS. If you say a gift play, all you're giving me is a strategy. I would need to know bearish or bullish for the bias. Then next, what's the trading time frame? And then lastly, your number 5 and 6, your entry and your initial stop. And think about it, how many times you see, most of you belong to other programs, so how many times in a room you'll see something like, oh, the euro is ripping, or, IBM is diving. What does that really tell you? You have no really basis to really go even look at something. So just a little bit of thought, and I repeat it often because it is good reinforcement. It gets people really thinking about their trades and what constitutes a trade. If you're new, that may seem 6 items may seem daunting, but very shortly after you get into the rhythm of it, there really is not much to it, right? Let's say Apple 15-minute time frame, VBS, entry here, stop there, boom, done. So once again, the floor is open to all of you, but at the moment, let's just take a look at the general markets. I know this sounds like a broken record, and I really only had one educational thing I wanted to touch upon here today. I did touch upon it in the equities room one day. I did touch upon it in the Forex room one day. But let's do the review of the overall market first. Here we are again. Seems like a broken record, just making all-time new highs. This is the SPY on the daily. This is the SPY on the daily. We use the SPY to represent the general market. It's the best barometer that we have in the stock market for the general market. It consists of, it's an ETF which consists of the top 500 companies, the S&P 500 again. And as such, if you look at this, it really has been another glorious year. This goes all the way back to April, and you just see, this is the pattern. Every time it comes into the 20 moving average, shortly afterwards, it makes new all-time highs. If you really look at that, right, comes into the 20 moving average, 3 days later, all-time new highs. Actually, officially breaks the 20 moving average. So there was a point here where the 20 was broken, and then within 7 days starts battling the all-time new highs. Within 14 trading days, makes all-time new highs. Comes back into the 20, all-time new highs. Back into the 20, all-time new highs. Comes back into the 20, all-time new highs. Comes back into the 20. I think you get the point. So, will this pattern continue forever? Absolutely not. Right now, is bullishness the predominant pattern? Yes. Is it giving us a lot of tradable IFT patterns? Sure. Basically, one VBS after another. So that's the overall market. Now, the bit of caution that I've given, there have been times, and basically I could circle the 3 most recent times where people brought it up in the room. I guess I could circle it once I get the writing tool started. Again, visually very obvious. There have been people in the room whenever, and this is kind of the trader psychology when you think about it. Whenever the 20 was broached and threatened or even officially broken, they were all in short. And that's fine. That's fine from a swing trading perspective. But my caution each and every time, one of the Bettys, who I haven't, so I take that back. One of the Bettys was here last week, but one of the Bettys was perpetually, whenever things pull back to the 20, particularly on the QQQ, and we'll get to the QQQ chart in a few minutes, but whenever it pulled back into the 20, she was all ready to short, almost like psychologically, okay, this one's going to be the big one. And my statement every time was, absolutely, feel free to do your short. But if price action starts getting back above the 20, have your protective exit plan in place. In other words, your stop. Why? Because the pattern consistently was, when it got back above the 20, it would go into all-time new high territory. And why would you want to be shorting something that is showing that much bullishness? So let's actually go over to the QQQ, since that's really the one that Betty was constantly working on shorting. And if you think about it, in the past 5 months or so, here, I'll go back a little bit further here. There were really only 2 times where that trade really worked. There were only 2 times where that trade really worked. And a little bit of review of market law 4, both times it would have officially been a change of trend too. So we'll walk through the market law 4 lesson a little bit here too. So once again, take a look at this, the end of 2020, oh my goodness, what a glorious, and I'll put it in a circle what I'm talking about, what a glorious IFT superpower trend where you could just keep doing one VBS after another. But then eventually the 20 did break. And I remember Betty actually shorting it. And once again, the statement has been the same to Betty for over 2 years now. If price action gets back above the 20, make sure you're out of that trade because it's predominantly back to the races. Also think about it. If you're doing that trade, you'd have to be very, very focused on this rising 200 too, right? So really for the short, you're working within this region right here because that 200 is going to be some very substantial support too. So first thing, this trade did work for Betty. I think I participated in it too. I think I ended up entering here on the VSS catch play and exiting here on the bar by bar break. I felt, here we go, we're starting to work our way back up towards the 20 again. I think that's what I did along with Betty. But I mentioned market law 4, right? This is actually, I actually should take a snapshot of this because this is perfect for a discussion of market law 4, right? The 3 parts of market law 4. The first part of market law 4, part 1, here, I'll actually make a little checkoff thing on the 3 parts. Part number 1, how many moves do you have in the current trend? Remember, this is very subjective, and it does not have to be precise. You just want to have a feeling, am I in a newer trend? Maybe a trend that really hasn't confirmed itself? Am I in a very old trend where the probability of follow-through is starting to diminish? Well, in this one, yeah, it was definitely an older trend. Let's even start here. 1 move, 2 moves, 3 moves, 4 moves, 5 moves, 6 moves, 7 moves, 8 moves, 9 moves. Boom. This trend is definitely getting older, right? The average trend is 3 to 5 to 8 moves. Okay, that's part 1. Part 2 is the trend remains reliable until you have a market law 2 break of the 20 moving average. And that occurred right here. So at that point right there, 1 bar closed below the 20, the next bar went further. That's when the uptrend is no longer dependable. So check off number 2 here. Number 1, I'll write the average 3 to 5 to 8 moves. Item 2, I'll write market law 2 break of the 20. And number 3, this is the tricky part of market law 4. And I've been spending a lot of time in the Forex room on this and a lot of time on the in the equities room on this, and it's the market law confirmation of the second move. Okay, I'll write second move. And here's what I mean. In order to have a change of trend, right, market law 4, the first thing you look for, how old is the trend? And you count the number of moves. Beyond 3 to 5 to 8, you know it's an older trend. If it looks like the first or second move, it's a very young trend. Second part, when does the trend become unreliable? Hey, Clayton, it's good to see you. When does a trend become unreliable? When you have a market law 2 break of the 20. This is the first time in however many months, November, December, January, February, March, approximately 4 or 5 months, where there was a break of the 20 on the QQQ. Now, when do we have the change of trend? And those of you who know the manual, you have the discussion that you have to form a lower low, a lower high, and then that has to be taken out. Once again, this does get a bit subjective. But I would say we have our first lower low right here. So I'll write LL. Our first lower high right there, I'll write LH, and then that has to be taken out. So right on this bar here, that's where it's taken out. At that point, for the first time, you could say, it looks like we have confirmation that we may be turning from an uptrend to a downtrend. And guess what? While all these bars are forming, 3 to 5 to 8 bars down, forming the lower low, 3 to 5 to 8 bars back, forming the lower high, 3 to 5 to 8 bars down again, taking out that first pivot of the first lower low and lower high. Guess what has time to catch up and start turning downwards? So another appropriate place to do the short, there were a couple of others, right? There's another VBS right there. Maybe another VBS forming there. So once again, even look at this. Here's another perspective. I am not trying to scare you out of shorting. I am just showing you what the predominant force has been, and it's been bullish. In the last year, the bears barely got 2 pivots in when there was a break of the 20. And the bulls, oh my goodness, whenever it gets back above the 20, how many pivots is that? About 10? 8? Somewhere in that vicinity? So just giving you different ways of looking at it based on the IFT principles so it sinks in a little deeper for you. So we've covered the general market. We've covered the general market being the SP with the SPY. We are taking a look at technology based on the QQQ, both daily charts. And we already did a bit of a review of trends, right? I mentioned the direction of 20. I mentioned superpower trend. We already did a review of market law 4. We already reviewed the short idea that a couple of people had regarding the general market. So now this is all the way back in March. Let's go forward. Here we go. It takes a little while, but there we are in all-time new highs again. And then there was only one other time this year where that 20 was broken. And here we go. Once again, a confirmation of a change of trend, but it did not last long. It only lasted 2 pivots. Here's the break of the 20. First lower high. I'm sorry, first lower low, first lower high, and then that's taken out. Is this going to be the big one that bashes into the 200, breaks the 200, and starts a long-term bear market? No, it's not, because there we go, off to all-time new highs again. So that's why my caution was and remains, if in these markets, the overall market represented by the SPY or the technology sector being the main driver of the overall market, being the QQQ, if you try something bearish underneath the 20, if it gets back above the 20, stop the bearish play. It's not worth it. Look what a beast of another superpower uptrend. So here we go again. Downtrends, we're lucky if they last 2 pivots. Uptrends, it's hard to even count the number of pivots sometimes. Now, why I already explained why we look at the SPY for the general market. Why do I always jump to the QQQ next? Because in my professional IFT opinion, the QQQ represents the technology sector. And for at least the last 10 years, if not even 15 to 20 years, the technology sector has been the major driver of the general market. So at times, like back in March and back in May, when technology was really petering out more so than the general market, I remain concerned that technology, the cues better start kicking in again bullishly, or the ability of the general market to keep its bullish ramp up would probably eventually fall apart. Nothing's definite, but when your major driver, right, when your major driver starts faltering, take an automobile. I used an automobile example the other day. I forget what it was, so I'm making up a new one. If you have a car with 6 cylinders, and the cylinders are what really create the compression and drive the engine and drive the car, if your cylinders start faltering, right, one goes out, another goes out, another goes out, the odds are of the overall car faltering too gets more and more likely. Same thing. In a manner of speaking, technology is the cylinders which have been driving the car of the general market, or at least the main compression, the main force. And that's nothing earth-shattering or new. I mean, go all the way back. When I say it's real, I keep saying 10 years. It's really 20 years. Go all the way back to the dot-com days at the turn of the millennium. Drove the market. And then there was the Great Recession, although I really think it was a depression myself, but then there was the Great Recession. And then after that, everybody thinks this is, they are unprecedented times. The major fiscal crisis a decade ago, and now the COVID times. But what I'm trying to say is, technology, when we've had predominant bullishness, which we have had most of the time, except for maybe the 18 months, from 2010 to 2012, and then what was it? 8 weeks in 2020 when COVID first hit. Everything has been bullish, driven by technology. So here's another thing I wanted to talk about from an educational side, and this is fun for me. I'm getting to squeeze in a lot of educational tidbits. But once again, if anybody has anything at all, any charts you want me to look at, any comments or questions, we'll do it. Or maybe this will just be a shorter session, just go over the general markets and a couple of educational things. That's fine. So here's a little discussion about a topic that came up in both the equities room and the Forex room. So if you're active there, you may have heard me respond to this there. And I think it holds universally. Somebody, and the discussion was a little bit deeper in the equities program. But a newer trader in the equities program was saying, oh, I could see why the summer is horrible, all this, and was really just reciting what he had heard. The whole thing, sell in May and go away. Now, again, we're traders. That saying is not complete. You could say sell in May and go away, or if you're short, you could say buy back in May and go away. But the whole point is that really this is the theme of that old saying, that that trading in the summertime really dries up and is not worthwhile. So I have no doubt most of you have heard that. My personal belief, my professional trader belief, is that saying really is not apropos anymore. And I do hear Dan and Paul talk about it, and even Oliver. And here's how I look at it, though. If I was, now let's take the year in quarters. First quarter of the year is January, February, March. The next one is April, May, June. So the summer, we're talking the third quarter, June, July, August, and we're right in the midst of that. And then the last quarter of the year is, I'm sorry, I said July, August, September, then October, November, December. So we're right in the middle of that third quarter. If you were to measure trading volume, I would guess that the third quarter is the lowest. So yes, do people take summer breaks? Sure. Europe is renowned for it. The U.S., people can't wait to travel now that, things were changing with COVID. Now they seem to be changing back the other way. So here's what I believe, though. Is the third quarter probably the lowest volume of the year as, comparing quarter to quarter? Probably yes. But oh my goodness, what we just went over in both the Qs and the SPYs. So I'm bringing up the SPY daily chart again. You're telling me there's no tradable opportunity this summer when we just keep constantly making all-time new highs? I think there's plenty of trading opportunity. I think there's plenty of patterns to work with. I think the whole thought that volume dries up to the point that everything flatlines for the summer is old school thinking. So, if it's day trading and you're used to doing, 5 or 6 equity trades a day, maybe things are a little slower and you're doing 3 or 4, but you're definitely able to find good quality setups. If you're swing trading and you usually do, maybe 1 swing trade a day, and now it's summertime and you're only finding two or 3 good ones a week, sure. But there's definitely great patterns there. and Forex, the same thing. The whole thing about sell in May and go away, that the summer dries up, that always was much more dramatic in Forex. About 15 years ago, when something like 90% of the trading volume in Forex came out of European nations, and Europe was known, what they used to call, or they still call, banker holidays, where, a 6-week vacation, for bankers and traders was very common. Oh my goodness, Forex dramatically dried up. I remember my first couple years in the Forex program before I was on this side of the microphone. I remember the moderators suggesting taking off the summer. I remember them talking about possibly even closing down the room for July and August. So that's how dramatic it used to be. Not anymore. Not anymore. So again, just the perspective. Now, should you not take off the summer? You should do whatever you want to do. That's part of the beauty of trading. You are your own boss. And IFT trading, even if you're in one of the funded programs, Forex or equities, you still make your own hours. There's no other place like IFT. Again, obviously I'm biased, but it has served me very well, and I try to voluntarily impart that to you too. So that was one thought, the whole thing that, summer is lousy trading. I just wanted to distinguish and honestly say, yes, the third quarter probably is the lowest trading volume, but oh my goodness. If all you have to do is open up your eyes and look at the screen in front of you and look at those beautiful tradable patterns. So, what was the other thing? There was another little tidbit, and then I'll probably wrap up with you today. There was another little tidbit. Let me think of what it was. I might have already covered it, and that's why it's out of my mind. I might have inadvertently or sort of incorporated it in the other things I was saying. Absolutely, Clayton. And Clayton, not just this summer, but I would dare say in both Forex and equities, probably the last 8 to 10 summers almost. You'd really have to go in Forex, you would really have to go all the way back to 2008, 2010, to really have a summer dry up. That could be it too. It's probably a combination of both. Um, oh, the second thought, I have a feeling that I already sort of inserted it in something else I said. It's slipping my mind, and that generally does not happen. So I'm going to sort of press upon this a little bit as I glance again at this SPY, which is just incredible, the superpower trend that seems to never end. Someday it is going to end, and I'm just sharing with you. I don't fret over that at all. I'm very excited. I'm just as prepared when this bull market. Oh, I remember the last thought. No, I didn't cover it, but it's a very minor thing. Um, and I'm sort of getting into it now. This perpetual bull market that seems to never end, it is going to end someday, and don't forget that. When it does, and we're obviously getting much closer to it, right? We're getting much closer to the beginning of the next bear market than we are to the beginning of this bull market, which has lasted over 10 years, the longest bull market in history. So let's talk a couple of things about bear markets. I'm going to say three things. Number one, I've already said it. We are much closer to the next bear market, I believe, than we are to the beginning of this bull market. In other words, if this bull market has been about 10 years old, I doubt it's going to be another 10 years until we hit a bear market. Just a little bit of common sense, but sometimes that common sense thing, helps you pause. So when we do enter the bear market, you're comfortable and say, all right, this is natural. This is almost overdue. And hopefully you have the skills to take advantage of it. This is just me. Um, as a day trader, I am actually much better measurably better on the bearish side. But again, that's just me. There's a lot of people that struggle with shorting in the bearish side. I've never had that issue. I understand why people have that issue because what the novice retail world teaches is only the buy side, right? They want you to buy and hold, right? Isn't that the whole thing? Buy and hold. Well, why? Think about it. It's like any product or commodity. General Mills or Kellogg's cereal. Do they say buy the cereal and hoard it and don't eat it? Yeah, no. They say buy. Oh, the box is empty. Go get another box. Buy the jumbo box. Go to Costco. Buy the thing that shrink wrap with 17 boxes. Always selling more product. Well, that's the same thing Wall Street does. That's, in my opinion, what buy and hold is, that the market is geared to just keep consuming, just keep buying. That's why bull markets run a lot longer than bear markets, right? The whole machinery is built upon selling product, being stocks and ETFs, and to keep consuming them and keep buying them. Keep put a little bit away each week, buy more. Put money in your 401k plan so the plan administrator buys more. So, some of these things we experience, why do bull markets last so long and bear markets generally so short? That's how it's designed. But the longer a bull market runs, the closer you're getting to the bear market, and just be prepared. I actually, it was in this program. I had a student that stepped away, and in the equities program, I remember in both places, when we had bear markets, they would step away. They said, you know what? I'm not comfortable on the short side. And as a matter of fact, I'll just take some time off until it's bullish again, which should happen within the next several months. So it's kind of interesting, and I hope these little discussions help. That's what they're intended to do during the study sessions, not stuff I would normally go over, on the educational weekends. So one thing was, we're definitely closer to the next bear market than we are to the beginning of this bull market. Who knows? You never know, though. Nothing is certain. Maybe this bull market runs another 10 years. I don't know. We've already broken all records in longevity. I'd be a little suspect of that from a probability perspective. The next thing is, why are bull markets so long and bear markets so short? Sebastian, good to see you. Well, I just explained that basically the markets are designed to mostly be buying mechanisms. Accumulate, accumulate, accumulate. Right? When was the last time Warren Buffett sold something? He does, but he does a lot more buying than he does selling. So the third thing I mentioned was it is a different type of environment. So, if you're not comfortable with the short idea, that's fine. And also another idea I threw out there, bear markets are measurably shorter than bull markets. So when let's even take the last 20 years. The last 20 years, I could run through them. Dot-com bubble. Oh, that lasted several months. 9/11, that lasted several weeks. The fiscal meltdown, the greatest fiscal crisis of my lifetime and most current living people's lifetimes, that lasted 18 months. COVID onset lasted 8 weeks. And then we have bull markets in between those that last years. Pretty interesting when you think about it. So the last thing I'm going to touch upon today, just for redundancy, we went over the general markets, tons of educational tidbits. And I do have time for a last minute question or so if any pop up. The last thing that I'm going to talk about is, let me just think for a moment. I think this is a good place to leave off. I was thinking, but probably not even venture into a whole nother topic right now. I think I'm going to hold on to it. For now. So here's what I'm going to do. I'm going to shut off the microphone, and it probably takes about 3 minutes for the recording, for me to have available access to the recording for today. So if you arrived later, just stick around, and I will post a recording in the room, but it will not be instantaneous. It'll take about 3 minutes for me to get access to it. Other than that, I am very happy to see that the notice, got out on time. When I first arrived here and first got on the microphone and there was only 4 of us, I was a little concerned. I was thinking, uh-oh. I told them on Sunday to send out the notice. So thanks for rearranging your schedule today or carving out some time. Like I said, I don't want to go too long, although we've been going almost an hour now. I didn't want to go too long because it is after market hours, and I would assume a lot of you design your schedule around the market hours. So on that note, Vincent, Victoria, Terry, Tao, Sunny, Sebastian, Ono, Nancy, Mark, James, Jack, Henry, Clayton, and Brian, thank you for spending some aftermarket time with me. And I very much look forward to our next session a week from today. That will be 1 p.m. Eastern, unless something unfortunate like today comes up or crazy like today comes up. So you're welcome, everybody. I really enjoyed covering these topics today. I hope you got something out of it. I will see you within a week. Those of you in other Oh no, Nancy. I thought when you said I misread what you said. When you said doctor, thought you were talking about Dr. Dan. Oh, Nancy, I am so sorry. I am so sorry. I will keep you in my, as they say, my positive thoughts and prayers, but I don't say that lightly. You know, when you say you're living in those offices, I have a feeling it's, definitely beyond annual checkups and stuff. So whatever the issues are, I wish you the best. All right, everybody. Thank you again. Those of you in various other programs, I will see you very soon. At Forex, I'll see you in the 8 o'clock hour, 8 a.m. hour tomorrow. Equity traders, I'll see you in the equity rooms. Let's see, what's tomorrow? Tomorrow is Thursday, so Oliver, I don't think is around this week, so I'm not sure if he's doing mentorship in the Black program. I think those may resume next week, but Dan will be back in the equity zone. Oh, Nancy, that's great news, though. Again, please take this the right way. Um, the first part of that is I can't even imagine experiencing that, the clotting, but the fact that they can't find a root cancer cause. I'm going to definitely keep my thoughts and fingers crossed that it remains that way, that it's just some crazy anomaly that you get through. Hang in there. Not easy stuff, Nancy. Not easy stuff. Keep me informed, Nancy. Keep me informed. Definitely, I want you to be the anomaly there. Prove them wrong. Definitely prove them wrong. All right, everybody. Vincent, Victoria, Tao, Sunny, Ono, Nancy, James, Jack, Henry, Clayton, Brian. I will see you real soon. And don't forget, I'm going to go silent, but if you need the recording, it'll appear in about 3 minutes in the room.